Man, that's kind of scary, y'all. Sellers are still conditioned to last year. Of course, we're getting there. We're getting there. Oh my god, rates are so high right now. What am I gonna do? If this continues to be the trend, then prices are gonna keep going up. I hope you guys missed this chart, because I do. Well, I look at it every day. Oh man, look at that, Lisa.
Oh my goodness.
Look at all the inventory going down. So, inventory went down like 3% from last week. But if you guys look right here, for the past month, it's been trending down, y'all. And look, new listings is up from last week, 15%, which is good. But if you look at the overall blue line, okay, the blue line indicates the new listings. It's very steady. See that? It's very steady. Pendings are very steady. Sold homes are pretty steady. Look at that dark green tab right here. It's pretty steady. So like, these are the stats right here. Weekly, 15% new listings, sold homes, 18%, pending, 8% from last week. So this is just week over week. If you guys go month over, previous month, it's this. Inventory went down from last month, 17%, Lisa. New listings down, almost 12 from last month. Sold homes went up 10% from last month. Pending is up a percent. And look, last year, man, around this time we had less inventory than last year.
Yeah.
Less homes entering the market, less homes sold, less homes being pending. Everything is less compared to last year. Man, that's kind of scary, y'all. If this continues to happen, it's gonna become a buyer's market again. If inventory continues to go downhill like this. Let me go on the average price per square foot. See, it's pretty steady week over week, 300K, 315, 320. It's steady, like 1% change from last week. Last month, it actually went up 3%, but from last year, it went down almost 3%. I mean, almost 10%. Days on the market, 56 days on the market on average. See, it's pretty steady, 40 to 56 days on average that it takes for a home to sell right now. Yeah, see, it hasn't changed one bit from last week. From last month, homes are on the market longer now by 12%. From last year, look, last year when homes were on the market 16 days on average, Lisa. Remember those days?
I remember those days. It was like, I don't know, yesterday, because it was like 2 years ago, not even that.
Yeah, for reals. Man, now it's 53 days on average compared to 16 days. See, and look, like the percentage of sellers getting what they're asking for is still slightly high, there's not a lot of lowballs going on as long as the sellers are listing their home correctly. There's 97% of sellers out there. They're getting what they're asking for. I mean, compared to
Yeah.
last year, 104% was getting more than what they were asking for, but then like 97%, that's still slightly very good. That means people are still buying. Sellers are still getting what they're asking for. So if you're a seller, it's not all bad news, Yeah, it's gonna stay a little bit longer on the market, but if you anticipate that, you market right, you price it right, you shouldn't have an issue getting what you're asking for.
Not at all. And when I'm looking at this, Chia, what I'm seeing is like I hear a lot of times where people are pulling listings off because it's not selling. You're only 3% of the that pool.
Hmm.
So if you're missing out on that, that's a huge step that's being missed.
Yeah. No, that's exactly what it is. Listen to your agents, y'all, okay? If you guys are putting your home on the market, listen to your agents. That's all I would say. Okay, let's go to average price sold. There you go. it's still pretty steady, you know? Like, even though this green light is kind of trending up, you got to pay attention to the red light. That's the sold price. Okay. And I mean, it's zigzagging up and down, but this is a week by week. But if you put it on a monthly basis, it's pretty steady. It's still in the 500K range. So look, barely a 1% change in active. Sold price went down week over week, 1%. But month over month, look right here. This is what I'm talking about. Micro versus macro data. Price went up almost 10% from last month. Sold price went up a little bit, but it did go up. Look, active price compared to last year went up 8%. Wow. Sold price though, look. Sold price went down 16% compared to last year, Lisa. You know what I think when I see this, Lisa? The fact that the average active price is higher than last year by 8% is telling me this. Sellers are still conditioned to last year. Sellers still think that they could get a lot of money for their home, and so they put it on the market for higher than what they think the home is worth, and that's why you see this. But in reality, it actually sells for this. You see that? Active is 742, sold is 512.
Wow. I mean, that's still a pretty darn high. It's still a pretty darn high number. But again, if you're not pricing it out right, you're part of that very small pool that's missing out. And if you're going to miss out on tier number two, or you're going to miss out on tier number three, but I don't know with the limited inventory that's going on right now. Chia, you would know best, but it's crazy.
Yeah, me looking at this, it's just kind of like you can't go wrong with data. You know, if you look at the data, you can't just pick and choose what you should or should not get for your home. The data's right there. You know, so of course it's still pretty steady. Earlier I had a conversation with a client of mine, and they were asking me, "Is it a good time to buy?" And they're like, "You guys know how I feel about that question. You know, everybody's situation is different," and that's what I told them. Even though rates are gonna go up, which we're gonna talk more about, you know,
Yeah.
Lisa's gonna talk more about later, prices are still pretty steady. You know, like what you guys see here is gonna go up, it's gonna go down, it's gonna go up, it's gonna go down. It's still pretty steady to where affordability is still a question right now. Okay, but of course we're getting there. You know, we're getting there. But just so y'all know, if you guys are in a position to buy, don't pick up pennies over dollars is what I would say, because home ownership, the opportunity, equity build while you're in the home, the potential for it to refinance once the rates do go down later, you know, you have options to choose from. And don't tell yourself a year from now, I should have bought when the rates were 5.5%. I should have bought when it was 7%. Because what if next year it's 10%? What if
Uh-huh.
it's, gosh,
It's kind
I
of
can't
crazy the
even,
way it's going right now. My goodness. I mean,
yeah.
this time last year, people were freaking out because it's starting to get into the threes.
Mm-hmm.
Um,
Yep.
so, I mean, it's more than doubled.
I know. I remember when it first went up to high threes, low fours. Everybody was calling us saying, "Oh my God, rates are so high right now. What am I gonna do? I'm not gonna buy anymore." And then boom, it's at 7% now. So this is a month's worth of inventory, y'all. Look, we went below 2 months now. See that? So we were going towards a steady market, but then like now we're going more back towards a seller's market, according to this, okay? And if this continues to be the trend to where there's less inventory, like over here where it's 0.6, 0.9, then prices are gonna keep going up.
Yeah.
Because you know why? No inventory, but more buyers, more demand. So I mean, hopefully we don't get back to that, you know? If this is a trend, that's what's gonna happen. Look, just from last month, it changed 34%. From last year, it changed 31%. It went up 31%. Man, This is the data, y'all. This is the data.
I love looking at this.
You love looking at this?
It's just
Why
because
is that?
it's always good to know where we're standing, where our business is, and everything like that, and how we can help people. Because people, what's the crystal ball question that we get asked all the time, Chia? Is now is a good time to buy, right? So I
Always.
love looking at data because it's not emotional. It's not attached to anything. It is what it is. So you got to look at what the market is doing, what's going on with your situation, your rent, and everything like that. Because again, interest rates rise, landlords loans are going to be more expensive, especially if investors are coming on in and buying some of these properties as well. Their interest rate is high too, which means they have to raise the rent in order to
Mhm.
curb that.
Yeah, it's going to be a domino effect.
Mm-hmm.
Everybody's going to start feeling the pain of inflation, the pain of
Mm-hmm.
prices, being adjusted.